Good morning, all. I'm Theodora Antonakaki, Director of the Climate Change and Sustainability Center of the Bank of Greece, and I would like to welcome you all to this first of a series of events on adaptation finance, organized by the Bank of Greece, the Ministry of Environment and Energy, and the Green Fund. As we all know, climate is changing at an unprecedented pace and in an irreversible manner. Therefore, apart from financing mitigation plans, there is an urgent need to step up climate adaptation finance. This implementation of adaptation measures requires resources and funding provided from public and private institutions, both at the national and international level. The scope of today's event is to share experience on financing adaptation among key actors of the financial system, identify current challenges, and highlight potential opportunities for scaling up financing for adaptation. Without further ado, I would like to give the floor to our Governor, Yannis Tournaras, one of the governors that have pushed the issue of climate and sustainability high in the central banking agenda. Governor.
Good morning, everybody. Good morning, Dora. Thank you for the introduction. It is a great pleasure to be here today with you in this first of our new series of events on adaptation financing. Climate crisis is a rising threat to our well-being and a healthy planet, therefore one of the world's top challenges. We need to act without further delay to mitigate climate change, but also to adapt to the increasing climate risks and turn this challenge into an opportunity. A flagship report of the Global Commission on Adaptation estimated that investing $1.8 trillion from 2020 to 2030 in areas such as climate resilient infrastructure could generate $7.1 trillion of net benefits. These benefits relate to avoided losses, but also to economic benefits, such as increased productivity and safety, together with social and environmental benefits. Hence, we need to scale up our efforts in financing adaptation. But what role can central banks play in tackling climate change? Governments have the primary responsibility, of course, to act on the climate crisis. However, central banks, including the Bank of Greece and the Eurosystem and the ECB, of course, cannot ignore this threat, as climate change may affect our ability to achieve our mandate for price stability as well as for safeguarding our financial system. You can see the various contributions of ECB members. On this basis, at the Governing Council of the European Central Bank, we agreed last summer on a comprehensive action plan with an ambitious roadmap to further incorporate climate change considerations into our policy framework and to more systemically reflect environmental sustainability considerations in our monetary policy. Turning to our national actions and goals, the Bank of Greece is one of the first central banks to address climate-related issues. Our journey started in 2009, when we established the Interdisciplinary Climate Change Impact Study Committee, a committee of scientists, I would say the top scientists in the country, that has been studying the economic, social, and environmental impact of climate change in Greece. A more recent milestone was the establishment of the Climate Change and Sustainability Center of the Bank of Greece in 2021 in order to coordinate climate-related actions across the bank and to incorporate sustainability considerations in our operations. Following that, in the context of the COAP 26 in November 2021, the Bank of Greece announced a pledge with several actions to contribute within its field of responsibility to the global efforts of central banks and supervisors towards greening the financial system and managing climate-related risks. On the adaptation front, our contribution in the design of the National Strategy on Adaptation to Climate Change in 2015 has been of major importance in paving the way for adaptation measures. Our current participation in the LIFE IP program, Adaptive Greece, reinstates our commitment, a commitment within the remit of our mandate and alongside central banks around the world to act as a catalyst in the financial system to accelerate the transition to an environment-friendly, carbon-neutral economy and to enhance, through adaptation, society's resilience to climate change risks. I hope we have an insightful and fruitful event. Thank you. Dora, you're...
Apologies. Yes.
Yes.
Thank you, Governor. Thank you. Now the floor to the General Secretary of the Ministry of Environment and Energy, Petros Varilidis, for his opening remarks.
Okay. Distinguished speakers, ladies and gentlemen, distinguished Governor, I'm very pleased to be here today with you. Through this workshop, we would like to engage with all of you in an open and constructive dialogue about the financial challenges of adapting Greece to climate change and how we could encourage the financial service sector to invest in adaptation. The workshop is organized in the context of the EU integrated project Life IP Adapting GR, aiming to boost the implementation of adaptation policy across Greece. It is coordinated by the General Secretariat of Natural Environment and Water, the Director of Climate Change and Equality, in cooperation with another 18 key adaptation partners, including the Bank of Greece, of course, and the Green Fund of Greece. The project runs for 8 years from 2019 to 2026 and is co-funded by the LIFE program of the European Union and the Green Fund. Scientists have issued a dire warning that we're running out of time on climate change. The latest IPCC report, released in February, stressed the need for accelerated action to adapt to climate change at the same time as making immediate deep cuts in our greenhouse gas emissions. The Ministry of Environment and Energy and the Prime Minister himself, acknowledging that now is the time for ambitious and effective climate action, has prepared a bill for a new national climate law, the first national climate law. The draft law has already been introduced in the Greek Parliament on Friday, and tomorrow it will be discussed in plenary, and hopefully it will be voted either tomorrow or after tomorrow. So in this new national climate law, we pledge to cut national greenhouse gas emissions by at least 55% by 2030, 80% by 2040, and reach climate neutrality in 2050. The first national climate law also includes a range of new measures to deliver on this pledge, as well as measures to strengthen Greece's adaptive capacity. It enables inter alia adaptation mainstreaming across sectorial policies, establish an adaptation observatory to support evidence-informed decision-making and track progress, and increase the insurance coverage to avert losses and reduce the cost of climate-related disasters, especially in areas that are susceptible to high probability of floods and high probability of forest fires. The National Climate Law complements the National Adaptation Strategy and the 13 regional adaptation action plans, as well as existing efforts to integrate adaptation in sectoral policies for water, biodiversity, forestry, environmental licensing, etc. Nevertheless, implementing these policy strategies and plans and making Greece climate resilient requires aligning financial flows with adaptation needs. We should unlock and upscale existing and new financial sources, both public and private, towards adaptation to climate change. I wish this workshop enlighten us on innovative finance mechanisms and approaches to encourage the financial services sector to invest in adaptation projects. Allow me to finish by thanking everyone who made this workshop possible, and I'm looking forward to learn from the experience and good practices shared by our distinguished speakers. Thank you.
Thank you, Secretary General. I would now like to invite Yorgos Protopapas, Director of the Green Fund, for his opening comments.
Thank you. Dear Governor of Bank of Greece, dear General Secretary, dear participants, before I make some remarks on the very interesting subject that we are dealing with today, allow me to thank the Bank of Greece for taking this initiative to organize this online workshop, and it's an initiative we cordially supported the Green Fund, not only as part of our obligation under the LIFE IP Adapting GR project, but as part of our vision on promoting the climatic resilience of intervention that we finance. With that, I would like to convey the support of the president of the Green Fund, Mr. Stathopoulos, who unfortunately could not attend today this event. The Green Fund is a Greek funding organization supervised by the Ministry of Environment. The mandate of Green Fund is to enhance development through environmental protection, to support the country's environmental policy, and to serve public and social interests through the management of its resources, which are mainly fines from environmental offences and taxes. In practice, the mandate of the Green Fund channels is fulfilled through the publication of concrete funding programs. In this respect, the financing of climate adaptation project is a key aspect for our day-to-day work, and I can assure you that the recent years we have seen the number of such projects getting increased, referring to the various attempts of increasing the resilience of our societies to climate change. In those, one may mention our urban revitalization program with a total budget of 8 million this year, through which all Greek municipalities can get funding for action that promote the greening of cities. The support provided to activities aiming to the prevention and restoration from climate-related damages, such as the support to forest authorities operating in Greece, and the support for the restoration of specific areas that have suffered from the mega fires in 2021. And last but not least, our recent incorporation of adaptations aspects in the priorities of call addressed to specific actors, such as research institutions and NGOs, in order to promote innovation and social awareness on the subjects of climate impacts, vulnerability, and adaptation. Having mentioned the above, though, allow me to confess that still remains a main challenge for our organization, is how to achieve the integration and mainstreaming of the climate resilience throughout the whole range of activities that we fund. We believe that this is a very important piece of the puzzle that is currently missing, and we expect that through our participation in the LIFE integrated project Adapting GR, and especially through the organization of events similar to the one which is about to start, we will be able to get new ideas and how to approach this objective. With these thoughts, I would like to stop here my introductory intervention to allow for the main part of our event to start on time. Thank you.
Thank you, Mr. Protopapas. At this point, moving on from the opening remarks of the three co-organizers, we have two short introductions to this series of workshops. Minister Stylianidis unfortunately could not join us live today, but was kind enough to send us a recorded message to support and honor this effort, a message that will be broadcasted at the end of the introductory session. So now I would like to invite Professor Zerefos for his short introduction. Professor Zerefos, Secretary General of the Academy of Athens and Climate Envoy for Greece, and of course, coordinator of our own Climate Change Impact Study Committee. Professor, the floor is yours. Thank you.
Thank you, Dora. Your Excellency, the Governor of Greece, and dear Excellencies and colleagues. It is indeed a pleasure for me to say a few words in view of a new mandate that has been challenged to the research commission that the Bank of Greece has created to calculate and update the climate change foreseen under the new modeling calculations. After about 10 years since the last announcement of the cost of climate change in our country, which exceeded 700, are expected to exceed 700 billion euros by the end of the century, while if we adapt properly and scientifically wise and correct, that cost could fall to 400 billion euros. Still, it is high. The Bank of Greece has been in the forefront, and our governor, I would place him among the green governors of our era. And it's a privilege to us as scientists to collaborate and address today to key representatives from the banking, the financial system worldwide. If we look at some slides, I want to show you the new results that have not been published. Dear Governor, with your permission, just for the taste to show that the medium scenario RCP 4.5 and the extreme, the bad scenario RCP 8.5, the situation compared to the similar calculations that we did at the Bank of Greece estimate in 2011, it's dramatic and actually quite worrying. The same holds for the regions which will face a reduction of rainfall, and the same holds for the aridity indices, which all for the eastern part of Greece, particularly the southeastern part, are endangering. So, and alarming for better measures. I know that the governor of Greece is going to, of the Bank of Greece, is going to present the updating results in due course in the months to come. And the costs, dear Governor, appear to be higher than estimated before. And along the lines that you have spoken, and I know your vision in establishing close link to help adapting, because adaptation is a must to cope and to bridge the whole financial and energy system on Earth before implementing full mitigation, which is the requirement for 2050. As it stands now, we have almost approached 2 degrees centigrade increase all over the Mediterranean as an average. And the situation as it stands, I think we need more support from the political side and from the United Nations. Greece is doing a wonderful job, and we thank you, dear Governor. We thank also the Ministry of Environment and Energy. And I'm speaking on behalf of about 40 professors who are collaborating to help the vision and the mandate that has been put to us. not only by the Bank of Greece, but also by EU through the Life Adapt in Greece. So thank you all. Have a successful meeting. It's so nice to see these international gatherings of representatives in the financial system, because as Your Excellency, the Governor said, the number of jobs that are created if we adapt and if we become greener, I think it is much larger than the number of jobs if we maintain the system as it is now. This cannot go anymore. Thank you so much.
Thank you, Professor. And now we will move on to watch Minister Stylianidis' recorded message.
Governor of Bank of Greece, Mr. Yannis Tournaras, dear President of the Green Fund, Mr. Stathopoulos, ladies and gentlemen, it's really my great pleasure to participate in today's event, an event focusing on the challenges of the climate crisis and the role of the financial sector. I would like to start by thanking the organizers, Bank of Greece, Ministry of Energy and Environment, Green Fund, for their kind invitation and for giving me the opportunity to address you via this video message. Sorry, I have to apologize that due to some prior obligations, I'm not able to be with you in person today. I sincerely hope that we will have the opportunity to meet in the near future for a more direct exchange of views. Dear friends, climate crisis is real. It's not fake news. It is a fact. It's not a fantasy. And it is one of the biggest, if not the biggest, challenge of our era. It affects every aspect of our lives. I think it's so obvious. Not only the environment and biodiversity, but also our economies, our societies in all aspects of our social lives, our well-being, and of course, our future, our common future. And the consequences of the climate crisis, climate change, are visible more and more often. And this happens all over the globe. See, for example, California and the unprecedented mega fires. Instead of the fire season, they are now talking about a fire year. It's something really unprecedented. Scientific evidence leaves no room for questions. Climate crisis is a hard reality. Therefore, to tackle climate change, we need to act now. Time is of the essence. Addressing climate change requires a global, strategic, and coordinated response, because no country and no institution can face this challenge alone, no matter how big or well prepared it is. So it is fundamental to work collectively. Cooperation and synergies are key in tackling the climate change, and of course, to join forces to prevent the most catastrophic prediction from materializing. Cooperation, also key words, cooperation at all levels, international, European, and of course national level, because climate crisis knows no borders. Also, cooperation with all stakeholders, national and international institutions and fora, no doubt the scientific community, the civil society, every citizen and, above all, volunteers. Because in this effort, we are all together. We are all on the same boat. Tackling climate crisis is a priority for our government, for the Greek government, and of course, Prime Minister Mitsotakis personally. The establishment of the Ministry for Climate Crisis and Civil Protection is a clear proof of this. A ministry aiming to enhance resilience and adaptability to climate crisis and its repercussions and consequences. Dear friends, to achieve our demanding goal, we need, no doubt, a holistic approach. An approach with emphasis on cooperation and which has to rely on three key pillars at its core: prevention, preparedness, and resilience. These three keywords underline our ministry's objective: to reevaluate and transform the transitional approach to civil protection, which focuses on response. And now, we strongly believe that we have to give more attention to prevention and preparedness, which in turn will make response more effective and more efficient on the ground. This new approach and our common efforts is highlighted in our preparations for the current fire season, focusing more on preventing measures and actions and working more and more on preparedness. This is the path we will continue to follow. This is the path we have to follow in order to mitigate the consequences of any natural disasters in our country. Dear friends, developing and solidifying this new culture will take time, of course. It's not easy way goal, and to be successful in this demanding attempt, we need partners like you, like the Green Fund, which can help us accelerate this process and develop R&D projects which will prove helpful in all aspects of our common efforts. Dear colleagues, there is no other way. We must act together. We must act collectively. We need to join forces to enhance the resilience and adaptability of our societies. And of course, the financial sector has an important role to play in these efforts. Adaptation-related costs cannot be met entirely by national sources. The financial sector's contribution is key to achieve these goals. And we need innovative financial vehicles which focus on climate adaptation, such as green bonds or concessional loans, or even emission reduction purchase agreements. You know, these very important instruments and mechanisms that create clear financial incentives and which spread the related risk over the long term are needed. This can also be discussed in a public-private partnership, a very well-known PPP context. And here, allow me to mention the case of insurance against natural disasters, which in our country, in Greece, is still in very, very low levels. Dear friends, to meet the unprecedented challenges posed by the climate crisis, we must think out of the box. And we should create incentives for all because everyone is needed to succeed in this effort. We are all part of the solution. We must combine our knowledge and resources, align our action plans, and coordinate our response. I'm really confident to say this is the only way forward. This is the only way we have to start all together in order to see at least a successful end. Thank you so much for your attention. I wish you a very interesting and productive exchange of views, and I'm looking forward to receiving the conclusion of this event with my team. Thank you again for this opportunity to address you even via video message.
Thanking the Minister on his important message on the key role of the financial sector and the significance of synergies, we will be moving to our first session, where we have the pleasure to have with us today key national and international stakeholders of the financial system, such as the Hellenic Bank Association, the Hellenic Association of Insurance Companies, the European Investment Bank, and the European Bank for Reconstruction and Development. This panel will discuss the role of the financial sector in adaptation financing. We have with us Professor Haroula Palaraki, coming from Paris, and we're very happy that she managed to join us today, despite her difficult schedule. We have Henry Moatos from the Hellenic Association of Insurance Companies, Maya Hennerkes from EBRD, and Ioannis Kaltsas from EIB. The floor is yours, Professor Palaraki. Thank you.
Good morning, Mr. Governor, dear ladies and gentlemen. I'm really sorry to miss my camera at this very crucial point. I said I'm happy to be in Paris, and I say I'm happy to be in Paris because everybody knows that in 2015 in Paris, a huge number of states has undertaken the commitment to protect climate and environment. Mr. Governor, permit me to congratulate not only Bank of Greece, but also Mrs. Andonakaki in person. We can never decline and reject her invitations to participate at a number of initiatives. And we are very happy that you have such an engaged ambassador in the climate. Thank you, Mr. Andonakaki. Thank you, Mr. Governor. Mr. Governor mentioned that early 2009, central banks, and among them Bank of Greece, started to engage with the climate protection and to see how the financial system can contribute to this task. The current situation is to all of us more or less well known. Before continuing with initiatives or the interventions of the Greek banking system to the climate change, let us remember the whole change. First is Europe and its strategic agenda to achieve zero carbon emission in 2050, and then to reach into 2030, 55% reduction, and in 40, 80% reduction. It's not sufficient for Europe to design and to plan these initiatives. We have a whole chain of 55 laws and regulations to be published in order to specify these general goal, and in order to give the member states the opportunity to adjust the new European requirements and legislation domestically. And as Mr. Varoufakis said, we are about to vote in the Parliament the first climate law. That means that we are about to complete the legal framework. But that's not sufficient, of course. Let me give just a few examples for the new challenges ahead. Europe is intending to run a repower action plan. The Ukraine-Russian war has generated new issues, and we have some unexpected events which may affect this main target. But the plan is stable. Europe is intending to give for the climate crisis a total of 600 billion the coming 5 years. And we have increased the first example of how the public and the private sector are working together in order to implement this ambitious goal. RRF, all the 6 contracts with 6 Greek banks are in place. The first plans have been submitted to the e-platform and are about to be assessed for their eligibility. For the total amount of 26 billion for Greece, 37.5% is addressed to sustainable and green investment among the 5 pillars that RRF includes. The main principle is the no significant harm principle. No investment plan shall be eligible under the RRF if this principle is not met. We have the advisor and the approval of the experts over us whether we have a sufficient number of experts who shall be able to assess the eligibility of it. Of course, we have, regarding the banking sector, the very good examples of EIB and of EBRD. Both of them are committed to flow at least 50% of their funding to the climate and environment crisis. That means that the whole environment, not only domestically, but also abroad, gives a clear signal that the banking sector is ready to go this challenge. Well, it's well known that the Greek banking system has not run its best decade the last years, but nevertheless, this last very difficult decade, Greek banks have worked on a smooth, silent, and very effective way in order to be ready to go this challenge. At the beginning, we have some green products offered by all Greek banks and mainly by the banks who were engaged in the agriculture. But at the same time, banks have designed climate-friendly products, and therefore they are now ready and they have obtained the experience to respond to this challenge. What they are now starting to offer to their clients. They started to offer to their clients, and clients are not only the bigger companies, but also the small and the medium-sized companies who cover the 85%, not only in the Greek economy, but also in Europe. And they need advice in order to come to sustainable finance. It is not an easy task because it's rather difficult to function on this multitasking way, to offer the product, to offer the funding, and to offer advice. Therefore, it is not easy for the banks to be engaged in the climate without having a stable public framework. Let me remind at a not very positive experience of the last decade, when photovoltaic started to be a very attractive investment for in Greece. 2 years after it, a huge fee has been imposed. This fee lent a number of companies to incapability to sustain its finance, and also led to an abolishment of big plants. Well, it's not only a matter of climate, it's also a matter of stability, both in Greece and in Europe. We are not. It's not sufficient for banks to offer green advices and products. We need also investments who are keen to cover the new plans. And up to now, we have, and therefore, not only banks, big banks, but also their asset companies have been commitment to the principles for sustainable and green investment. Well, recently, Mr. Andonakaki, on behalf of Bank of Greece and Hellenic Bank Association, which is represented by the chair of the EXCO, have been invited by the Minister of Finance to establish a workshop and then to proceed with a publishment of a bigger volume which shall cover all the climate challenges. On this way, the competent minister for the funding has shown the way how the change has to be operated. If we lose in this procedure even one stakeholder, state, central bank, companies, organizations, banks, then I'm afraid that without this collective cooperation, we cannot meet the target. And a final remark. Green transformation, transforming finance in order to finance the transformation, it's not an easy task. We should take care also of the other companies which shall not be able to sustain these challenges. And we have also to address even a smaller amount for them. Thank you, Mr. Governor. We shall continue to work together with you and Mrs. Andonakaki. In 1 month, a new committee shall be established in the Hellenic Bank Association, the ESG committee. Well, we have three, but environment is, of course, in first place. And I do hope that we shall be able to exchange very useful and constructive views with you and with the other stakeholders. Thank you.
Thank you, Professor Palahaki. We are sorry that we missed your visual as well. It would have been a pleasure to enjoy having you with us as well through your visually as well. Thank you for your comments. Synergies are important, of course, and we will be fostering those as well. That's part of our work at the Life IP program as well. Now, I realize that you will not be able to be with us more as
sorry, I have to attend the European Banking Federation. You know, that's also, it's important because Mr. Governor knows that the Greek banking system and the banking system has to work very hard in order to go through all the challenges.
Indeed, indeed. Thank you, Professor. Now, at this stage, I would like to invite Mr. Henry Moachos from the Hellenic Association of Insurance Companies, a member of the board and of the executive committee, and leading currently the Property, Catastrophe and Marine Committee of the association. Mr. Moachos, the floor is yours. Thank you for being with us today.
Good morning, ladies and gentlemen, and I'm very happy to be with you. May I express on behalf of the Hellenic Association of Insurance Companies our thanks to the Bank of Greece, the Governor, and Mrs. Antonakaki for giving us the opportunity to be here with you. Just to precise, I'm not anymore a member of the board and the executive committee. I'm just heading the property committee, but that's okay. Allow me please to share my screen a few seconds. I hope I will be able to do that. Right. So if you can see that, then we are set. Good. So as you probably know, for centuries, the insurance business, by its nature, has accompanied societies and economies in growing better by assuming the risks inherent to the activities of people and businesses. We allow them to test new ideas, to take risks, innovate, and therefore we as insurers are in fact supporting the growth and well-being. Without any doubt, the climate crisis results in more and more severe climate-related natural catastrophes, be it floods, wildfires, or other extreme weather events. On a global scale, natural catastrophes cost every year some $250 billion, the figure for last year by the Sigma report of Swiss Re, with an increasing trend. But there is a big protection gap. Only 100 billion euros were in fact covered by insurance, which leaves 60% uninsured, with less developed countries having a much higher gap than this average. And sadly, the less developed countries are those that are also experiencing the biggest number of fatalities. Now, in Greece, the protection gap is too high. Only 1 out of 6 households are insured, which gives a gap of 85%, and only some 200,000 businesses out of 600 to 700, if I'm not mistaken, are also insured. Unfortunately, we don't have the time today to analyze the reasons of this low insurance penetration, which is a very big discussion. But we can certainly state that our biggest challenge is how to become more relevant in helping people and businesses manage their risks and in financing the residual risk that cannot be avoided, what we call closing the protection gap. Now, despite this protection gap, insurers in Greece have contributed over €500 million for some 40,000 claims in 40 Nat Cat events in the past 25 years. And it's worth saying that 50% of those have happened only in the past 5 years, which confirms there is a trend there, and which also proves that our contribution can be significant despite the low penetration rate. So the opportunity for insurance to support adaptation to climate change, I would say, is threefold: as a risk manager, as a risk carrier, and as an investor. As a risk manager, insurers can play a key role in informing people and businesses of the risk they face and how to protect themselves against those risks. They do this as part of the normal underwriting process, but also as a standalone service, mostly towards corporate clients. But I believe we can extend this advisory service to our clients, to the individual clients as well. We know that prevention costs less to societies than the cost of restoration. So preventing is so much important. Insurers also develop risk models using the many data they possess and give advice on the severity, on the frequency of events. They study the trends and employ and work closely with scientists and academics. Also, we know of many examples of insurance companies financing scientific research on topics related to climate change, to catastrophes, to resilience of cities, and other relevant topics. Now, as a risk carrier, insurers absorb the economic losses of natural catastrophes and help the society to be more resilient. To make us more relevant, however, we must find ways to close the protection gap I mentioned before. If we look at our country today, how do we cope with the cost of natural catastrophes? Well, we rely heavily on state subsidies and financial assistance by the state, which, however, is unfortunately inefficient, and the payment process is long and inefficient. With increasing losses from the climate change, the state budget will certainly be under extreme pressure in the future and will not be able to finance losses from the increasing number of events we will certainly go through. And after all, it is not for the state to protect our private properties. It's our responsibility, our individual responsibility, each of one of us to protect our property. Insurance is globally playing a pivotal role in the system, and there are many examples and best practices around the world where countries have managed to better finance natural catastrophes through collaboration. As it was also mentioned by Minister Stylianidis earlier before, collaboration is so important. The industry in Greece, through its association, which I'm representing today here, has studied thoroughly the subject and has come up with a complete proposal for a scheme that will provide affordable insurance to the households of the country. We examined many schemes in different countries before coming up with our own proposal. Now, insurance alone may not be able to finance all the potential losses that we may face in the future. So a partnership in the form of a public-private partnership will be essential. Our proposed scheme includes such a PPP model. In a nutshell, the scheme provides for mandatory insurance managed by the private insurance sector with a co-insurance share by a state fund. This allows to utilize the efficient and solvent private insurance market whilst maximizing the financing capacities through the state fund, which can also play a role in guaranteeing in times of need what we call the insurer of last resort. Furthermore, insurers are lately steering their portfolios of insurance risks towards activities which are less harming for the environment and are developing products which promote green behaviors and investments in green energy, green buildings, etc. A few examples of how we actually see this. Excluding some fossil fuel extraction activities like coal, for example, and sometimes going even further to banning downstream activities of natural gas is something that several companies are doing. But excluding may sound easy, but it presents a relationship risk with clients and doesn't necessarily solve the problem altogether. On the other hand, working with clients to find solutions when they do have plans to transition to greener activities will perhaps be much more relevant than just excluding them from insurance. Analyzing new hazards from novel activities such as renewable energy installations, carbon capture and storage units, reforestation, nature-based solutions, and offering insurance products for those new activities is also something that will help adaptation. Offering discounts to clients who protect their assets against natural hazards. They do install detection devices in their homes and businesses, invest in low emission energy and heating equipment. Advising on how to build back better after a loss, how to make more resilient a house or any other building after it has suffered a loss. And offering discount for what we call responsible behavior, such as driving less, such as driving more responsibly, buying electric cars, etc. There are many best practices which are available to share all over the world, and events such as this one today, I believe, are very, very useful to bring all those ideas in Greece as well. And I would like to mention also that recently the Hellenic Association of Insurance Companies has joined as a signatory the UNEP FI Principles of Sustainable Insurance. And we look forward sharing and contributing to the European initiatives for an insurance market that supports really a sustainable society. And the third area where insurers can help adaptation is acting as in their capacity as investors. We know that insurers have significant assets under management. If we take Europe, the assets under management of the insurance industry are 11 trillion. And in Greece, it's something around 20 billion. Through divesting from fossil fuels and reinvesting in green assets, we can help steer the world towards a more sustainable future. There's always the question as to the competitiveness of such green products. But I believe in the future, and they will become mainstream. And the most recently adopted taxonomy regulation, which will greatly assist to know which investments are indeed green and which are not, and to avoid the greenwashing and not knowing exactly which are the true green investments. So in a nutshell, I would say that insurance can play a pivotal role in Greece to assist climate change adaptation. And the challenges are there, but those challenges are to show us where the opportunities are to be more helpful and more relevant in our society. So I thank you, and the floor is yours again, Mrs. Antonakaki.
Thank you, Mr. Mouatzis, for the excellent presentation. Indeed, the insurance sector has a primary, if not a key role in this equation, in these challenges. At this stage, I would like to invite Maya Henriques to join us, to take the floor. Maya is the director of the Green Financial Systems at the Climate Strategy and Delivery Department at the EBRD, having previously led EBRD's ESG work with financial institutions and private equity funds. Maya, thank you for joining us today.
Yes, thank you very much, Theodora, and very good morning to you all from London. I'm very happy to be here because, as you know, EBRD is and wants to be a very strong partner for Greece, and we invest a lot in Greece. And I'm also very thankful to the Central Bank of Greece and specifically to you, Theodora, for the leadership in bringing this conversation to the table because it's very timely. We've seen earlier from the striking data that Mr. Serafos showed us that we are running out of time, so we cannot really, wait. I also believe it's going to be a very big topic at the next COP in Egypt, of course. So I think this is the right moment. And I'm going to just start sharing my screen. numbers should be coming up. So very briefly, I assume you're mostly familiar with EBRD and what we do, but I think it's very important to note that climate finance has been something that has been right, front, left, center, in all directions for us. We have just finalized our approach, and we've announced and we finalized the approach on how to align all our financing with the goals of the Paris Agreement, which we will be doing from the end of this year. And you can check out the methodology. It's publicly available. I believe we're one of the first ones to bring out a really comprehensive and very detailed methodology on how to do that. And also, we are planning to be a majority green bank by 2025, which means that 50% of all of our new approvals on an annual level will be destined to green projects. And we have actually already achieved that last year. So it was a very successful year on the climate finance side for us. So I think this really lays for us, is part of our core strategy. It's what we do. But we also, I think we need to be very honest here in this forum. Adaptation finance particularly is really difficult. And I think it's important for us to look at the barriers and really honestly identify why it is so difficult. I think we all agree that climate adaptation and resilience is a key component. We absolutely need to do it. It results in quantifiable positive outcomes for our clients, to the wider economy, to the society, but also for us, it is a key risk management aspect that as financial institutions, we would be really foolish to ignore. Maybe before I go into some of the numbers, I just wanted to quickly talk about the barriers. Why is it so hard? Because I do really feel strongly that we need to crack the nut on adaptation financing. And it is hard because it's quite hard to monetize. There is a lack of incentive sometimes if you compare it to mitigation action, which makes it quite difficult to bring the private sector in and to structure as a financial institution bankable projects that have a strong adaptation component or that are fully adaptation projects. Sometimes we also see that those benefiting from adaptation are not always the ones that are actually paying for it. So again, that makes the financial structuring a bit more complicated. And then as EBRD, for example, we invest a lot through local banks. As you know, we are partners of all the 4 systemic banks in Greece, for example. For us, it's really quite difficult to quantify the impacts of adaptation components on a portfolio that goes through another financial institutions. When we disperse those loans to a financial institutions, we don't really know at that stage what sub-projects will materialize. And we have still, it's very difficult to apply a very narrow use of proceeds approach, because this is how adaptation finance so far has been working. We've been quite successful in doing it in, for example, large infrastructure projects where you have a project finance structure where we know exactly, okay, this is the project. We have also a longer time horizon, which of course lends itself for adaptation financing, because adaptation focus is by nature, it's a long-term undertaking. So we struggle a little bit when we do this through financial institutions portfolios. And maybe another barrier that we've seen, at least, is that there are still limited options for off-the-shelf solutions, specifically for the SME, for the retail sector. We have a piece of the solution. We have the Green Technology Selector, which you can find online. It is a great database of technologies that also includes adaptation technologies. So there are initial efforts and we have some things in place, but I think it's still something where we need to work on. Now, I'm going to come very quickly to the slides. You see here a little bit our experience with adaptation finance. So since 2011, we have invested 2,875 million in dedicated adaptation finance projects under our green economy transition approach. That translates into 350 projects, yeah. And you see here on the side of the screen, on the pie chart, you see in which countries, or in which sub-regions rather, I should say, this was mainly the case. Now, what we also see here, and I've alluded to it in the beginning, 80% of it was in infrastructure projects. It's easier. We can ring fence our financing to the infrastructure projects. We have a longer time horizon. We can plan it a little bit longer ahead, and we can build in the spending of adaptation measures into the financial models because of its long-term nature. In the corporates field, we've done 10 to about 15%, or of our share, 10 to 15% went into the corporate sector, and financial institutions are lagging a little bit behind with 5 to 10. So again, I think this is really what we need to focus on, how we can crack the nut and really step it up when we work directly with corporates, and of course when we work with financial institutions, which is of course the focus here of this audience today. Very quick example how we're trying to get there. This is an example from Tajikistan under our Climate Adapt program. It was launched in 2016, and we give financing to enterprises, but also households, and it all goes through local banks. So this is definitely something that financial institutions should or may want to look into, also microfinance institutions. And the type of investments are improvement in water, energy use, sustainable land management measures. The way it was structured was through a concessional, it's a blended finance structure. It has a concessional longer-term finance component, which is important to overcome precisely this affordability gap, to actually take action on climate resilience. And we have two windows. One is for businesses, particularly in the agricultural sector, which of course lends itself to adaptation projects and needs them very badly. And then another window is for households. Oops, I'm going backwards, not forwards. That's never good. There's another few examples, which I'm not going to go through them in detail. You can take a look at them, but I think it goes to show that through financial institutions, we can tackle adaptation. You see here that the types of investments we've invested are things like investing in drip irrigation systems, wastewater treatment, energy saving lighting, and refrigeration technologies. These are the type of investments, and very importantly, we need to measure the outcomes, of course. So you see here on the bottom, the energy savings and the water savings that we've been able to calculate for those investments. Now, it gets a bit tricky sometimes how to account for adaptation finance. So we follow the methodology of the multilateral development banks. Of course, we have a joint methodology for climate finance, and it looks at the different climate resilience outcomes. Their estimations, we go here through those 6 categories that you see here on the slide: water availability, energy availability, agricultural potential, human health or productivity, weather-related disruption or damages. And what's very important, and I think another thing for us collectively to work on, we have so far been basing this on a very narrow use of proceeds approach, where we could somehow quantify, but it also makes it difficult, specifically when we work with financial institutions, for the reasons that I've mentioned before. So the EBRD is working jointly with the MDB group to find new ways of doing that. And that also really falls in line with our Paris alignment approach, because under our Paris alignment approach, we do move from the narrow use of proceeds focus to a much more holistic counterparty model. We've heard this argument also before. We need to really look at climate in a much more holistic way. We need to look at how banks, at how companies establish their governance, their climate corporate governance, to tackle both the mitigation and the adaptation challenge. So I think collectively, these are models we should think about, how we can improve a company in its inner working, so to speak, or financial institutions, and then have measurable outcomes, not only on the mitigation side, where we already have it a little bit easier, but also on the adaptation side, of course. Another example here, and maybe I should talk about the opportunities, because I've mentioned a lot the barriers, but of course there are opportunities as well. So again, I think this counterparty approach is an opportunity in itself, because it allows us to gauge financial institutions much more holistically, and companies as well, and help them to really mainstream climate considerations within. Now, that will also lead then hopefully to an improvement of the management of physical climate change risks. And I think this is a big opportunity that we cannot miss. There's also a business opportunity here. So there are new products in the market. sustainability-linked loans come to mind, maybe sustainability-linked bonds, where also we're looking more at the economic activity or the company itself, and we're looking at more generalized KPIs that the borrower will achieve. And if those, for example, could include adaptation targets, I think that would be a great step forward. Now, there's also the capital markets, of course. Climate resilience bonds, we've issued one ourselves as EBRD, but we also work with clients generally on green bonds. And we're also very happy to look and support our clients to expand perhaps from the more mitigation heavy green bonds to climate resilience bonds, which we think there are opportunities. And there are some more information here on the slide that I will not go into, but we've provided here the links. I'm sure we can share this after the event. And that really concludes my presentation. I just would like to make a final call to action, so to speak, because I really believe strongly that now is the time, and the data and the science is fully behind this. So I hope this can be the start of a conversation and hopefully a longer collaboration of all the parties here in this virtual room. Maybe also we can do it in person next time. It would be lovely. And yeah, I'll hand back to you, Theodora. Thank you.
Thank you, Maya. Thank you for the excellent presentation and all the examples you showed us, both in terms of challenges, but also opportunities, and the fact that you can actually have tangible results from adaptation financing. And I will vote for your for your point in actually having the next workshop live all together in a real room next time. Hopefully we will be able to do that. Thank you. Now we will move on to Ioannis Kaltsas from the EIB. Ioannis is heading the investment team for Greece and Cyprus at the European Investment Bank and has an extensive experience in those issues, both at the UN and the World Bank. Ioannis, thank you. The floor is yours.
Many thanks for this opportunity to be together with you. Many thanks for the invitation, and congratulations to the Bank of Greece for not only for this initiative, but all the work that has been doing the last few years on the area of climate change for Greece. I have to say that honestly, for us, this is quite important. So congratulations to the organizers. Now, today's discussion, it's more relevant than ever, and it has to be put within the scope and the current climate that the world economy and the Greek economy is going through. Today we have three big forces that seem to influence the world economy. We're exiting a pandemic, which this pandemic is having significant disruptions in the logistics and in the production chains, which they cause a lot of secondary effects. We have a situation of war in Europe, which also has significant consequences for the economies. And we have also a quite unique situation for at least for one generation of high interest rates. Interest rates in the United States and the UK now seem to have reached a 40-year high, bringing an era that many of us, at least people in my generation, we thought that we're not going to have to live. And within the situation, within these projects, remains and will continue to remain the challenge of climate change. Now, we, from the European Investment Bank, being the EU bank, we have taken the decision that we will be the climate bank of the European Union. And this commitment stands despite the fact that we have demands from our shareholders and stakeholders to work together to mitigate the economic effects of the previous three forces that they are currently pushing the economy. What does this mean in practice? This in practice means that we'll have to make sure that we provide some short-term relief to the problems that people, European citizens, European Union citizens are facing today, but at the same time, never lose the focus and work towards long-term solutions for the problem of climate change, which will stay for us for several generations in Europe. The European Investment Bank in Greece is well known. We worked there the last 60 years. I think a lot of our projects are well known. I see in my Greek passport, for example, there is one of the EIB projects, the Rio Antirio Bridge, which is in there. But traditionally, we have been an infrastructure bank. Let's face it. We have linked our name to most important of the Greek infrastructure, the main roads, ports, airports, and bridges of Greece. It is no surprise, therefore, to tell you that looking in our statistics between 2001 and 2018, Greece was 26 out of the 27 last of the countries in terms of climate change share within the European Investment Bank. The EIB was financing mainly infrastructure investments, very low investments in climate change. This is about to change. 2 years ago, this share of EIB financing, climate finance in Greece reached 45%. And this year so far, we have done over 70% of our financing is dedicated to climate change, to a large extent also thanks to the cooperation with the Greek intermediaries, the Greek banks. And this is significant because the EIB is a big financier in Greece. Last year, we financed as EIB Group, EIB and EIF, 4.85 billion euros just in 1 year. So we feel that it makes a difference, not only in its financing, but also through the dialogue that we have with the government, with the main ministries, with the banking sector, and with the Greek businesses in Athens and all over Greece. With respect to climate adaptation, within the European Union, we estimate that the annual needs for climate adaptation is between 35 and 500 billion euros a year of investment. These are the needs. Okay? And of course, this will seem an incredible big amount, but we have to put it next to an estimated cost of 170 billion euros a year of losses that we will have in the European Union in a catastrophic scenario where where we have a 3% increase, 3 degrees Celsius increase in the atmosphere vis-a-vis the pre-industrial levels. Therefore, these investments are quite important. And in the EIB, we estimated that between the 2012 and 2020, we financed 197 billion euros of climate adaptation, which resulted to, which financed projects of 670 billion euros of adaptation. Now, as previous speakers highlighted, climate adaptation is not an easy area of investments, and it requires a lot of action, not only from the investors, but also by a combination of players, be the private sector and, of course, the government. In Greece, the way that we try to see climate adaptation, we see it in 7 main areas. This is the water sector, water scarcity and flooding. In Greece, we have done a number of anti-flooding projects. Protecting energy and transport sectors, we still finance these sectors, but we make sure that these sectors are well protected in terms and take into consideration climate adaptation. And of course, urban and regional development, food systems, forest and ecosystems, health, education, and public research. A lot of emphasis in innovation, disaster risk management. With Mr. Stylianides and the Hellenic Republic, we have put together a very ambitious project in terms of climate prevention. Last year, we had signed 570 million euros of investment with the Hellenic Republic to make sure that there is infrastructure there for the future natural disasters, and promoted gender responsive adaptation financing. In practical terms, this means that, as I mentioned earlier, that a lot of external factors make the investment climate more difficult and make the cost of money much more expensive, and also the money, as the money become more rare, we have to make sure that really they maximize the value. Then the co-influence of all the players towards working together for climate change and climate adaptation becomes more important together. For example, the insurance sector certainly has to play a bigger role. I have to admit that I happen to have a vacation house in Greece, but I don't have it insured. This is the reality. This is something we have to see there. There is also the reality that so far our investments as EIB, we have to admit, have been focused on grey infrastructure, on buildings, on making sure that construct things that deal or prepare the public or the private sector for the consequence of climate change. But increasingly, we were working with NGOs in Greece, and I'm very proud of latest work that we have done together with a group of NGOs in Greece in terms of natural-based solutions for the anti-flooding problem that Greece is facing. And there is where the value could lie, where a small investment together with the right legislative and regulatory reforms could have a big impact for the country in an era that the money indeed becomes much more expensive. The way forward is not easy. The way forward is not easy, not only because we are in the middle of a very difficult financial situation, but because the cost of climate change, the 170 billion euros that could come in the future, will not affect the whole European Union or the different levels of the society. So we have to make sure that when we do investments or where we design with a government policy or the future actions, that these costs or the relief to these costs, they design in the right way so that they do not exacerbate social inequalities and problems that the societies are currently facing, specifically in a high inflation environment or on an environment that we're facing pressure from third factors like the effects of a war type situation in Europe. Therefore, solutions like imposing, insurance to everybody automatically in Greece, it's an easy idea, but it has to be studied carefully about how things has to be deployed. But certainly, we have to make sure that alignment of incentives are there for investors and for individuals so that we all take our responsibilities in front of the big responsibility that we have towards using the public money correctly, but also protecting ourselves and the next generations towards the consequences of climate change. I would like to close this brief intervention by saying that the EIB is planning to organize a dialogue towards nature-based solutions in the future in Greece, based on the work that we're doing with NGOs. But at the same time, we have two more initiatives. The one has to do with the fact that we were trying with the Hellenic Republic to establish a post-disaster fund, because so far what has been happening it is every big natural disaster, we're running after the people to provide compensation, and this happens in a very inefficient way. But maybe if we're better prepared to, because disasters will happen, extreme phenomena will happen, then we can make much more targeting the support to the right people and to make sure that the money are allocated in the right way. Plus, Greece is currently in discussions with the Hellenic Republic for supporting Greece to issue its first ever green climate bond. We feel that these three initiatives, which is within our role as being the EU Climate Bank, could be transformative for Greece. And as I said, I would like to invite you also, all of you, in this dialogue, because we want to make sure that these initiatives will go to the right way, and we have to learn from all your experiences from Greece, but also globally. Thank you very much.
Thank you, Ioannis. It's a pleasure to always learn about new initiatives in this domain. Great to see all the work that you're doing, and of course we will be happy to be part in that. It's a good opportunity that you also mentioned nature-based solutions. That's an issue that we will be focusing more on in the next session. At this stage, and since we are at the Q&A of this first session of the financial sector opportunities and challenges, I would also like to welcome our Governor Yannis Tournaras for a last comment, because we have been privileged to still have him with us on the session, as of course we still have also Professor Zerefos and all the people have been here for their introductory remarks. So, Governor Tournaras.
Yes, thank you. Thank you, Dora. It was a very interesting session, actually. I changed my program because with more and more speakers coming to the floor, I understood that I was learning a lot, so I stayed with you. I've heard very interesting things from both Harula and Henry regarding the banking system in Greece and the insurance companies. But even more important, I would say, our international colleagues, Maya and Yannis, that they brought their experience. It's extremely useful. What I understand is that we have a very heavy agenda in front of us, both for banks, insurance companies, but of course the government, central banks. As you know, now climate adaptation will play an important role in the stress test of banks that are underway in the SSM and the Bank of Greece for Greek banks. We have so many things to do, really. And today's session I found extremely interesting. So go on. We learn from your experience, and as there is no cloud without silver lining, the terrible events that are happening in our borders in Europe, it's an opportunity to accelerate green targets. You have all read the European Commission new program for the green targets. So I suppose we have to take this into account in our plans. to accelerate both investment in infrastructure, in networks, in storage capacity for electricity. I think this is an important issue that perhaps we haven't paid too much attention up to now. Networks, green networks, and storage capacity, I think, is what is missing from our plans. So I suppose this is something that you must take into account. Thank you.
It's always great to have your leadership on those issues. And I have to say again that our governor is one of the central bankers worldwide that has been pushing high for this climate and sustainability agenda. Thank you again for everything.
Thank you. You allow me now to go.
Of course.
Thank you very much. I wish you a very fruitful event. Thank you.
Thank you, Governor. I know that Professor Zerefos would like to take the floor for a short comment.
Let's listen to Christos as well before I go.
I'm sorry, you don't have, Professor Zerefos, you don't have the sound on. You're on mute. Thank you.
I was speaking pantomima, sorry, without the microphone. So thank you, Mr. Governor, Dora, and all of you. Indeed, it was enlightening to listen to you all. But I still have one question that really puzzles me. The insurance sector is supposed globally to have paid 100 times more insurance in the past 60 years than before. So in the 50s, the global insurance market was about $10 billion. And in the past decade, I read somewhere, and actually in the United Nations, that this cost went up to 1 trillion, which is 100 times more. So, of course, if one compares these figures with Greece, Greece had never had, I think, any serious insurance policy against extreme weather events, I guess, except in the past couple of decades when everybody started realizing that after the extreme events that we had, particularly in the 21st century, the past 20 years, everybody worries now and everybody agrees that we have to do something. So going to the Greek sector of insurances, I'm surprised that there is no any campaign on TV or elsewhere from that sector to encourage people why they don't insure their homes themselves. We are so lazy also in the cars. I saw somewhere that there is quite a bit of a percentage that they don't insure their car. So this is something that has to do with our culture, or it's something that it's the result of not much of advertising of what we should do. This is a great part in adaptation for climate change in view of the extreme events that we foresee to come. Thank you.
Thank you, Professor. I realize we have a lot to do on this part, and if I'm not mistaken, that's insurance has a major role also in the new climate law. But I would expect Mr. Moazzo, Henry Moazzo, if he would like to respond to your comment before moving on to the new section.
Of course, and I can only fully agree with what Professor just said. We have a very low insurance penetration, and I would say there are many reasons. Of course, we don't realize, we are in danger as individuals, but I would stress at this moment that we have to take the share of our responsibility in informing people about that, in doing more. And I fully agree, Professor Zerefos, we have to communicate that, there are risks out there, and increase the penetration, not just because people will, realize that by themselves, because unfortunately, we have the tendency to believe it will not happen to me. So the low probability becomes zero probability. So insurance...
I'm sorry, it's a Mediterranean culture,
Well, very much, I would say,
it's
yes.
Also in Arabic, a saying that "ibad anni," it means away from me. So makria pomas, it's a Greek word, and
so clearly we have to do more. We have to inform people. It's part of our job, and I think your remark is very, very relevant.
Thank you, Mr. Macho. Before moving on to the next session, in closing this session, I would like to address a short question as well to the other participants, Ioannis Kaltsas, Maya Henriques, and I know we don't have with us Professor Apalagaki at this stage, but I would like to ask them, what else can we do as financial system actors to enhance awareness on adaptation financing, each and everyone from your own role? How do you see this issue? Thank you.
Shall I start, Theodora?
Yes, Maya, thank you.
I think there's several components to it. We need to show the business case. We need to start showing financial institutions and companies why it absolutely makes financial sense to look at what's happening to the climate and the measures that they need to take. I think the insurance sector is probably where we have the best data on that business case, because they see all the good and the bad and the ugly. So I think here, this is important, I think, to listen to the insurance sector, and we can learn a lot from them, I believe. It requires a lot of capacity building still. We see that financial institutions in the day-to-day hustle of the business, it's not that simple. And getting broader ESG sustainability right, and specifically getting climate risk and getting climate resilience right, is not simple. There are no simple solutions. So I think we need to be patient, but we also have a strong sense of urgency. So that's a bit hard to marry the two. We need to invest in capacity building. I think fora like this one are a first step, because we bring this knowledge from different angles, and we can look at what works and what hasn't, and then we can start, thinking about the next step. I think this is absolutely key. We probably need to also start thinking about some solutions that take the complexity a little bit out of the system. So, for example, for financial institutions to identify much more easily what would be a climate resilient technology that they can finance and deploy, so that they don't have to do all the thinking and all the the analysis themselves, because it's just for many FIs, despite the will, that may not be realistic. So I think, there's many angles to it, and capacity building, transparency, and of course awareness raising. These are all important components.
Thank you, Maya. At this stage, we do have another question from our audience. Before moving on to Ioannis, apologies, Ioannis, I will also mention this question from the audience in case anyone wants to take it, because actually I think it would have been for the Greek Bank Association, but in their absence, maybe you would like to take it. The question is, how could Greek banks' credit risk analysis face the challenge of speeding up financing green and climate-related investments while maintaining low risk of adding new non-performing green loans?
Just if you allow me to come in and to quickly address the three topics we discussed. First, with respect to insurance, it is not true that in Greece there's no insurance market. Let me put it in a different way. I think in Greece, the state, people believe that the state is their insurance. Okay, so people believe that in an event of a natural disaster, the state will step in and will compensate. So it's an expectation that they have towards the state. And we saw in the natural disasters that we have, indeed, there was a lot of public pressure and the state came in and provided some compensation to the people that their houses were flooded or their houses were burned, etc. So we need to have a discussion to what is the limits of the state, because the EIB, for example, or the European Commission with its grants does not finance compensation towards individuals for natural disasters, not eligible cost. So we have, in a way, to find a way to the private sector to a certain extent, or to a large extent, or to a total extent, subsidize this role of the state. Now, this has to happen in a very careful way, because, for example, making insurance obligatory for everybody in Greece who has a house in Greece could have, a very negative public reaction. So it has to be carefully calibrated, the increase of the private sector within this market. This is my view. Then, with respect to the second topic, what has to be done to increase climate adaptation? Here, there's a market failure. Okay, if imagine in a town where we do some anti-flooding investments, if none of the citizens, or if the citizens, the private citizens, they were limiting the amount that they pave their garden, their private space, and they were not putting cement, they were not putting concrete, and they were leaving garden space, green space, etc., then, of course, there will be much less need for anti-flooding projects at municipal level. The market failure is that there is no incentive for the individual not to have his garden, to leave garden and not to pave this garden. Now, in Luxembourg that I live, I cannot pave my garden. Okay, there is legislation. It limits the amount of my garden that I have to pay. So this is why what I'm saying is that our current discussions that we have, because we do finance municipalities, we do finance regions, we do finance anti-flooding projects, is we have to combine the right legislative and regulatory measures to ensure that the right incentive structure is once again there. Now, with respect to the last question, with respect to how banks account for a climate risk, and including there is a well-established methodology. Actually, in the EIB, we apply this methodology to our portfolio and to individual investments in terms of taking into consideration the climate risk, as we take technical risk, financial risk, exchange rate risk, or whatever risk. Climate risk now for financial institution is quite, it's one of the risks that we have to assess each individual investment, but also the portfolio of our investment. So there's a well-established methodology, and I think also the Greek banks are doing it actually.
Thank you, Ioannis. I realize we are running extremely late, but I guess we are already compensated by the interesting discussion that is taking place today. Makes it even more important and imperative for us to continue in this path. So moving on, thanking you each and every one of you that have already participated in the introduction, the opening remarks, and the first session. We are now moving on to the second session on financing adaptation, best practices, and lessons learned. We will be discussing funding sources for adaptation, policies and tools that are available or need to be designed or redesigned to address adaptation financing needs and the economic potential from adaptation. Now we have with us for this session Svetoslav Danchev from EOV, Olivier Vardakoulias from the Climate Action Network, Michel Moulin, Michael Moulin from the OECD, and David Style from the Climate Change Committee. I would like to invite you now Svet Danchev for the first intervention. Svet is Head of Microeconomic Analysis and Policy at the Foundation for Economic and Industrial Research, with extensive experience and expertise in fiscal policy, structural reforms, investment projects, and economic activities. Svet, the floor is yours. Thank you.
Thank you very much for this introduction, and thank you very much for the invitation. I'm going to present a few slides from an ongoing study that we do for the Bank of Greece. And this study deals with the challenges and prospects for the Greek economy from climate change adaptation. Most of the slides are based on one of the chapters of that study that deals with adaptation financing at a global scale, although I will try to draw some conclusions for Greece as well. What I'm going to mention touches upon two key questions for adaptation financing. How much financing is needed for climate change adaptation, and what type as well? What is the optimal mix? So in terms of the size of financing, climate financing overall attracts considerable funding. However, out of this, a relatively low share goes to adaptation projects. About 7% of the total climate change financing is estimated to go for adaptation projects, and about 3% goes to cross-cutting projects that involve mitigation and adaptation. So 90%, most of the funding goes to mitigation purposes. In absolute terms, the adaptation finance is estimated at around 46 billion per year, which is much lower than the investment needs. In the developing countries, the investment needs currently are estimated about 60 billion, while similar numbers on the EU investment needs for adaptation, we heard from Mr. Kautsas for the EU, for the European context. So we are very much short of the total that we need to finance. There is a funding gap for climate change adaptation, and this gap, if we don't increase the funding, will increase. The needs are growing for 2030 in the developing countries. The needs are estimated to multiply by a factor of 2 to 4 as the effects of climate change become more severe. So why is there such a funding gap? Already, Ms. Henriques, she mentioned a few practical barriers to this. And Mr. Couch has mentioned the market failures, and this is what we look at first as economists. In fact, the example of paving your garden is quite central to this in terms of the positive and negative externalities involved in doing adaptation. Another market failure that needs to be taken into account is the public good nature of many such projects. So you cannot really envisage a large-scale coastal protection scheme that is funded purely from a private company planning to charge those that will benefit from this protection. This is not really feasible. So these market failures, indeed, as Mr. Katsas said, they require changes in legislation. They also substantiate considerable use of public finances, probably more public finances that are being used now. But of course, public finances come against the need to spend on other social projects and works. So is public finance sufficient alone to tackle adaptation? Well, public finance is a very good instrument to do large-scale public works that involve mature technologies. It is also quite helpful at the other end of the S-curve that describes the development of innovative ideas. The initial stages where the risk is way too high for any private investor to expect any positive return. There is also room for public investment there, but during the intermediate stages, where we see an idea evolving into a mature technology, these stages they also involve a lot of risk, and for these stages, various private finance instruments, such as venture capital, business angels, private equity, IPOs, and also bank lending. This is with a different degree of risk tolerance. All of these types are also needed in order to develop innovative climate change adaptation solutions. And so we need a mix of public and private finance that involves a mix also of instruments. And we looked into possible cases where this mix is close to the optimal, and we compared the US and the EU experience in this. And we can't say that any of these two approaches is really optimal. It has its strengths and weaknesses. So that in the US, there is indeed a strong equity capital market and a lot of financial innovation. The approach is pretty much can be categorized as a bottom-up approach. Most of the decision-making on climate adaptation seem to take place at municipal and state level, but there is a lack of, there's not so much done at the federal level in terms of mobilizing large-scale resources for public infrastructure projects. Quite the opposite can be said about the EU, where the approach is much more centralized. The EU institutions have a leadership role in driving both policy and funding for climate change adaptation. There are the cohesion funds, which provide funding for the large-scale projects. And there are also programs such as Horizon and LIFE and Interact that provide funding which lowers the risk at the early stages of the development of an idea. But in the EU, we have a much weaker equity capital market, which does not help an idea that has been proven to work to achieve really a global scale, so that it can provide a solution much more in a much more efficient way. Now, in this problem is particularly strong for Greece. Greece has a very low supply of equity. The total equity investment fund shares that are held in the Greek economy amounts to only 15% of GDP. And this is the third lowest performance in the EU. So the EU has relatively low use of equity for financing such ideas. And in Greece is even worse in that respect. So this is a major challenge for us going ahead. Now, in the study, we look into various sources of funding, and we describe them in detail at the global level, by the UN agencies, at the level of multilateral development banks, and we already saw some numbers from the EBRD and EIB. And I will not go into the detail of this funding. We described some EU instruments at the EU level, and we also described some policy and funding instruments at the Greek level. But I'd like to use the time that I have left to discuss an example of how one project, one idea used the available funding. We can think of it as a best case. Actually, the project did receive some awards for its success, but also to illustrate the challenges ahead. So this started as an idea, is a PhD thesis actually in the National Technical University of Athens, Polytechniou. The idea was to use solar energy in order to desalinate seawater and produce salt and drinkable water. So the PhD thesis, it evolved into a pilot project, a demonstration project funded by LIFE. The project was successful, so it evolved into a larger project, a Horizon 2022 project with many partners, commercial partners, and it showed that it can be commercially scaled up. So then it received incubation support to turn into a commercial company, and it now is a commercial enterprise. It is incorporated in the Netherlands, and this move hopefully will provide it with sufficient further capital, equity perhaps at first, for the company, for this technological solution to increase in scale and be capable of providing this solution to many clients across the Mediterranean and why not around the world. But we are not there yet. So this is a challenging now period. where finding equity capital could prove difficult. So the key takeaway from my slides that there is a substantial adaptation funding gap, which is mostly due to market failures, and these market failures, they require substantial use of public finances, but this is not sufficient. We need all types of finances, various types of finances, particularly private equity funding, if we are to have innovative adaptation solutions, achieve a scale of efficiency. And this is a key challenge for Greece, where the supply of equity capital is particularly low. So if in Greece we want to be producers and exporters of climate change adaptation technology, we need to do something about the availability of equity capital for this purpose. Thank you very much for your attention.
Thank you, Svet. Thank you for setting the scene and identifying all these challenges on adaptation financing. Now I would like to invite Olivier Vardakoulias to join the stage from Climate Action Network. Olivier is the Finance and Subsidies Policy Coordinator at CAN, with extensive experience in financing adaptation and nature-based solutions. Something that also Ioannis Kaltsas mentioned earlier at the previous session. Olivier, the floor is yours. Thank you.
Thank you, Dora, and thanks for the invitation. Hi, everyone. Okay, I'm sharing my slides. I hope you can all see them. Yes?
Yes.
Excellent. So what I'm going to do, I could have spent my 10 minutes speaking about NBS. I'm going to mention them at the end, and on bankable projects and bankable solutions, which is a very interesting topic. What I'm going to do instead is provide a bit of the big picture building on Svetoslav's presentation. And I will pose in my 4 questions that, in my opinion, are central. And these questions are based on kind of best experiences that we're seeing in other countries. And you know, hopefully these questions will also trigger a debate around the next priorities for Greece. The first question is about how do we articulate the different sources of finance that Svetoslav mentioned earlier. The second question is, how do we leverage domestic funding instruments? Because in my experience, there is a very strong gap there, particularly on public financial instruments. The third one is, how do we articulate at different levels the EU sustainable finance strategy and the developments at the level of the ECB with the domestic financial sector in terms of financing adaptation? And finally, a crucial question where I'm going to mention NBS is the issue of cost effectiveness. What are we investing in when we talk about adaptation? Are we investing in the right things? And is there a maladaptation risk, that is, investments that in theory are contributing to the adaptation, but are not necessarily doing that, or are not doing it in a cost-effective way? So very briefly, building on the previous presentation, I think that the first key gap when you look at the Greek national adaptation strategy and the regional strategies is essentially the mismatch between the targets and what needs to happen attached to the different sources of finance that can contribute to these targets. And I think that, you know, a key objective of an updated national adaptation strategy should precisely look at these different levels. Now, we have different sources of finance. What I'm having here in the slide is far from exhaustive, right? Public spending or pure public investment, concessional finance. We earlier had presentations from the EIB and EBRD who provide this type of finance, and then the kind of pure private finance. And I think that evidently there are different challenges for mobilizing different forms of capital, but we need to think about 3 things. We need to identify which type of projects can be financed through which source. And the reason for that is precisely because we know that, you know, the public spending and public investment components, including EU funds, which I'll come back later on, are clearly bounded, right? They cannot finance everything. So we need to make sure that this kind of funding provides genuine additionality for the kind of infrastructure and the kind of investments that do not have any bankable component, are pure public goods, and so on and so forth. On the concessional finance side, evidently, you don't need all the projects to be fully bankable. To some extent, you can have projects which generate some form of social or broader economic returns, through which you can then pay back the loans you get. So evidently, you need some form of bankability, right? But this form can be broader or more macroeconomic. And finally, on the private financial side, the issue of bankability and the difficulties of essentially monetizing adaptation investment was mentioned. However, I should say, having worked quite a bit on that in the past, that there's a lot going on out there, both for adaptation and for biodiversity. There are many demonstration projects that are actually being created and can then be potentially scaled up. The question is, again, trying to figure out in the whole adaptation ecosystem as part of the national strategy or the regional strategies, what kind of projects, bankable projects, could be created driving private finance. The second question I'd like to pose is the one of the articulation between EU funds and domestic financial instruments. And I'm saying that because I'm sure that the panelists here know that, but in Greece overall, there is this kind of belief, including in parts of policy making, that we can fulfill all investment needs with EU funds. And this graph is just one example, looking at the entire mobilization of climate-related investments through different sources, including the Recovery and Resilience Facility, the cohesion funds, ERDF, and so on and so forth, and looking precisely at the investment gap that there is out there. So one myth we need to dispel is that this is clearly not enough, and we need to align domestic public financial instruments. But the problem here is that when you go into detail in the different instruments we have, with a few exceptions, right, these are clearly not up to the task. Svetoslav mentioned earlier that in the EU there is a flat percentage of investments that need to be dedicated to green investments, adaptation, mitigation, and so on. There is nothing on the sort in any of Greece's economic support instruments, investment instruments, for example, the Greek investment law, the strategic investment law, the Hellenic Development Bank, and so on. And this contrasts, for example, not only with pure EU funds, but equally with instruments, like InvestEU. So I would say that we urgently need to set in place some policies that actually align and can actually complement the EU spending side, and that can include, sectoral investment policies. The EIB, for example, has that. It can include climate mainstreaming methodologies. How do you actually define an investment which positively contributes to adaptation and so on? Again, there is a range of tools to do that, including Rio markers, now the taxonomy and so on. And last but not least, climate proofing methodologies. Now, what these do is that essentially, even if an investment is not directly targeting adaptation, essentially a climate proofing methodology in particular can ensure that that investment at least essentially is climate proof in the face of future adaptation, impacts of climate change, and so on. And in that way, you can ensure that essentially, a lot of the investments happening in the economy that are not necessarily directly targeting adaptation, at least take into account these considerations overall. The opportunities for changing those, I would say, are twofold in the current political context. The first one is that last year we had the first attempt, although it was extremely partial and superficial. There was a first attempt to essentially introduce the notion of grid budgeting in in the annual budget process of the government. And the Greek government is currently working with the OECD, as far as I know, to actually develop more concrete indicators. And this can then, provide a picture of the impacts of different budget lines of the Greek state in terms of both mitigation and adaptation. And the second opportunity is evidently the National Climate Law, which refers, to taking into consideration climate dimension in national investment policies and so on. I would say that we could have stronger provisions on that, but in any case, it is a framework which can then be expanded to include these kind of things. The third dimension I'd like to put is the articulation between the EU sustainable finance agenda and the domestic financial sector. So as you know, we have on the one hand, the sustainable finance strategy at the EU level, which will notably require from the domestic financial system, Greek banks and so on, to disclose their taxonomy aligned investments, and that includes evidently adaptation investments. And we have a series of other regulations that are being introduced or revised, such as the Green Bond Standard, the CSRD, which replaces the Non-Financial Reporting Directive, and so on. And there I would say that the way, if we look at the way, for example, the Non-Financial Reporting Directive has been applied in Greece, there are a number of reports that show that it was actually applied very weakly in terms of what companies disclose regarding their environmental impacts, including adaptation. So we need to see how essentially these EU-driven policies will essentially be implemented in Greece, and how these can, catalyze, if you want, and incentivize climate investments, including adaptation. The second part concerns financial regulation. So it was mentioned by the governor earlier. Evidently, that there are many changes happening on the potential policy front, climate stress tests, and so on. A question here, again, is how this applies to the domestic financial sector. Now, we know that systemic banks are regulated by the ECB. However, there is a much smaller proportion, but an existing proportion nonetheless, which is supervised at the national level by the Bank of Greece. And I think it's important to stress that although it's a kind of residual proportion of total loans in the economy, it does touch upon some sectors like agriculture, which are crucial in the adaptation debate. And what you can see here are essentially the results of the first stress test report that was done by the ECB, and the results for Greece, especially concerning the exposure to physical risk of climate change, are extremely stark. Now, we can debate the methodology and so on, but essentially, what these results suggest is that the exposure is number one in the Eurozone, which is should raise some alarms. Last but not least, an issue I think that we should debate more in Greece is the issue of cost effectiveness of adaptation policies and adaptation investments. And I'm going to mention two examples. The first one is forest fires. There was a recent report published by WWF Greece, which looked at the spectrum of financing for forest fires over the past 5 years, so 2016 to 2020. And we know from scientific evidence and from scientific advice that it is not sound practice, for instance, to dedicate all your money to essentially suppressing forest fires, right? Yet when we look at the spending mix in Greece, like almost 84% of total funding for forest fires was essentially directed to suppression capabilities, and only 16% to prevention, including forest management and so on and so forth. I just give an example of, the UNEP headline advice where, they speak about a kind of optimal spending mix, and they show very well that, the side of prevention and preparedness ideally should be much higher. And what we also see is that when we look at in detail in the National Recovery and Resilience Plan, we see a repetition of this pattern, right? It's not a new pattern that has been happening for the past 20 years, probably, although now we have detailed data for the past few years. But the issue here is that are we spending, on the right components, and how can we ensure that, the interventions are cost effective, particularly in the light of the impacts of climate change and so on. The second one is floods. We mentioned earlier NATO's based solutions. And what was interesting is that when we worked on a report on proposing essentially different investment programs in the context of the Recovery and Resilience Facility, we looked at a few studies on the benefit cost ratios of different forms of intervention. And indeed, for instance, based on a joint research center report, we found that NBS by and large have a much higher cost benefit ratio than grey infrastructure solutions to tackle river flood specifically, but this very often applies as well to broader flooding, sea level rise, and so on. Now, there are, as was mentioned earlier, some pilot projects happening at the moment, but the lion's share of spending still goes to grey infrastructure that are more expensive and much less effective. When I say effective, it's essentially monetizing, the risk reduction and the impacts, basically, at the end of the process. Again, unfortunately, when you look at the Recovery and Resilience Plan, that's just one example, we again see a repetition of the pattern, this kind of path dependence, right? So the answer to that is essentially we're going to build river dams, we're going to create concrete around rivers and so on, which we know now, based on evidence across the EU, are completely suboptimal solutions, aside from having very negative impacts on biodiversity. So my key message here is that this should be a very strong topic of conversation. We're not accustomed in Greece of speaking of cost effectiveness, especially when we're dealing with public funds. But given Greece's fiscal position, the very large investment gap which exists and is real, we cannot afford essentially to invest in subpar interventions. We really need to maximize the impacts of public spending by looking very specifically at the type of impacts that different interventions may have. I'll leave you with these thoughts. I thought of adding a final point, but it would be too long on the demand side of things, which is equally important. Thank you.
Thank you, Olivier. Thank you. Thank you for your intervention. A lot of food for thought, a lot of challenging questions there, especially on the issues of maladaptation and the cost effectiveness, things we need to be thinking through in the next years and decades. So I will move straight to Michael Moulin from the OECD. We are all aware of the time. We still hope we get, I'm sure we all get compensated as well, as I mentioned earlier, from the interesting discussions. Michael, the floor is yours. Michael leads the OECD's program on adaptation, finance, and investment, and he's also serving as a special advisor for COP27. Thank you, Michael, for joining us.
Thank you. Just give a little moment for the slides to load up. In any case, look, it's a real pleasure to be here. It's been a fascinating discussion over the past couple of hours. So really congratulations to the speakers and to the organizers for this event. So I think because we've had such a rich discussion, I'm going to skip over some of the slides that otherwise I might have gone into in a bit more depth to talk on a couple of points that I hope are complementary to what's been discussed already today. So firstly, as a framing slide, I'm sure many of you will have seen this chart from the Global Commission on Adaptation, which sets out the cost effectiveness for 5 possible adaptation options. I'd like to highlight 3 points that I think are relevant for the discussion. The first one is in terms of cost effectiveness. You'll see, obviously it varies by measure, but in general, there's a lot of cost-effective adaptation potential out there from a social perspective, The challenge, of course, is to turn that socially beneficial investments into ones that make sense from a business case perspective. The second point I'd like to emphasize is about scale. So we may be talking about, in some cases, fairly small individual interventions, but collectively, we're talking about hundreds of billions, if not trillions, of investments needed over the coming decades. And so that means whenever we speak of adaptation finance, we need to have that in our mind of, okay, what sources can we mobilize this level of funding from? The third point I'd like to emphasize is that a lot of this investment will take place as an integral part of investments made for other reasons. So, the investment will be the new road, the new railway line, with the climate resilience being a part of that process. As such, when we look at particularly the estimates that are out there of current flows of adaptation finance, that's only picking up part of the story. What we don't have a good sense of is, beyond the money that's being spent with the motivation of adaptation, what's happening to broader financing flows. And so just to give an illustration here, according to the CPI analysis, all tracked adaptation in 2019-2020 was around 46 billion. I'm afraid the 49 here is a typo, compared to global infrastructure investment of around 2.7 trillion each year. The point being, no matter how effectively that 46 billion is being spent, we need to make sure that these much bigger financing flows are going towards activities that enhance resilience and away from activities that undermine it. So we're OECD, we're a policy think tank, and I think that frames how we come at this issue, which is, I think there are 5 key areas that we need to focus on to help address some of these barriers that the speakers have mentioned earlier: lack of awareness, lack of incentive, lack of capacity, and so forth. The starting point is, if you don't understand the climate risk, you have no incentive whatsoever to manage it. So public investment in these core capacities to provide risk mapping, the underlying climate data is essential. I think it's also interesting and encouraging to see the degree of which the private sector has now got involved in the climate services bandwagon. I think if you just looked on LinkedIn and the number of jobs being advertised in this area is a kind of an anecdotal sign of there's increasing view that this is not purely a public sector issue. It's something that also is a potentially profitable contribution. The second point is in terms of standards and regulations at the strategic level, but also at the implementation level. I've highlighted a few here, but around a third of OECD countries have updated at least one standard to account for climate change, thereby adding at least a base level of resilience to investments that are being made. The third point is lending and public procurement. I think we've heard already about the risk screening at the EU level. Of course, the MDBs, including EIB and EBRD, have also been extremely active in terms of pushing forward on risk screening for new investments. My former colleagues at the Global Centre on Adaptation have developed a knowledge module on PPPs, which is basically building capacity for integrating climate risks within the PPP framework. And then fourth, which is maybe something slightly less familiar, I think there's a real potential for catalytic public funding in upstream planning to then generate much larger flows of public and private investment down the line. I think when we speak about the difficulty of developing a pipeline of bankable projects, part of the issue is that for a lot of worthwhile adaptation measures, you have a bundle of costs and a bundle of benefits. And by working upstream, bringing together different investments, you have the potential to combine and package different funding sources into a size of investment that that then becomes attractive for larger financial institutions, and also, yeah, it helps to achieve this range of co-benefits. Maybe you can say this more concretely. Again, at the GCA, we worked with the government of Ghana to do a systems level infrastructure assessment, which has now identified, I believe, dozens of potential projects down the line. So it's a very small amount comparatively of dedicated public funding can then catalyze potentially much more down the line. And last but not least, looking particularly at the financial sector, I'd highlight 3 areas. The first one is, of course, transparency and disclosure. Again, this goes back to an earlier point. There's no incentive to manage risks that you don't know are there. And the process of exposing the risks also gives the incentive to manage them. The second point is about engagement. So we're seeing this very much on the mitigation side, where talking about transition planning, and it's not enough just to disinvest from polluting industries. You also need to work with them to get them into a better, to become part of the net zero transition. I think analogously for adaptation, we don't want to be just in a model of disinvesting from businesses or communities that are exposed to a high level of climate risk, because many of the, particularly on the community level, these people are already the most vulnerable for other reasons. That would be exactly the opposite of what we want to achieve. What I think we need to be looking at is a mindset of engagement and a mindset of working with partners to develop credible transition plans, but transition in that sense for managing the transition of rising climate risks. And last but not least, of course, the development of financing instruments. In principle, those who are on top of climate risks, those who are being proactive in managing them, these investments are less risky. And so making sure that those benefits are reflected in the cost of capital, including through instruments such as the resilience bonds that Maya mentioned earlier, will be absolutely critical. With that, thank you for your time.
Dear Michael, thank you for your interesting intervention. Indeed, there are a lot of questions raised there on these issues, and all your work, I think, is helping us realize the potential for adaptation. Without taking further time, I would like to invite David Style from the Climate Change Committee. David is a senior analyst in the Secretariat of the UK Climate Change Committee, working in the adaptation team, where he leads work in the areas of business, finance, and economics. Welcome, David.
Thank you very much, Dora.
Thank you. Thank you for being with us.
My pleasure. It's a pleasure to participate in today's event. And hello, thank you, and hello to everyone listening. So I represent the UK Climate Change Committee, which is an independent organisation set up to advise the UK government and those of Scotland, Wales, Northern Ireland, and also report to UK Parliament on the UK's progress in tackling climate change. In my presentation today, I'm going to talk about the results of the most recent UK climate change risk assessment, how this has led to the UK Climate Change Committee deciding to do a new report on adaptation finance, and some early views into the approach and content of that report. So the most recent UK climate change risk assessment was CCRA3. It's the third one that's been done to date. And a key finding from that assessment was that the level of urgency has increased since the previous assessment, CCRA2, 5 years ago. This slide shows that the percentage of risks and opportunities considered in the assessment had increased in terms of those which had been given an urgency score of more action needed. The reasons for this increase in urgency are twofold. The first is that new evidence collated since 2017 suggests that the level of risk that we face has increased. And the second and more important reason is that the level of adaptation in the UK has not kept pace with this level of risk. And so the gap between the two has widened. The Climate Change Committee also identified several particularly high priority areas for further adaptation in the next 2 years. These were chosen on the basis of the urgency of additional action, the level of current adaptation planning, the opportunity to integrate adaptation into policy over the next several years, and the need to avoid locking in poor planning as we recover from the COVID pandemic and other global challenges. The first 4 of these risks relate to different aspects of the natural environment, covering habitats and species, soil health, carbon stores, crops, livestock, and commercial trees from various different climate hazards. And there are also key risks due to climate-related collapse of supply chains and distribution networks, from climate-related failure of the power system, and risks to human health, well-being, and productivity from increased exposure to heat, as well as multiple risks to the UK from climate change impacts overseas. The UK still faces significant risks from flooding and water scarcity. However, the level of adaptation planning for those risks is more advanced than these areas, and hence why they don't appear on this list. We're gaining more and more evidence on the economic costs and benefits of adaptation measures, and the findings that we have at the moment suggest that the net benefits of adaptation are high, with benefits substantially exceeding costs for many adaptation measures, and many are even low or no regret. And across the board, we find that acting early typically has much larger benefits than delaying action until after an event has happened. However, this is still an area where much more evidence is needed on costs and benefits, particularly trying to understand the impact of different adaptation measures on the level of risk that we face. Based on the adaptation gap found in the assessment, the committee set out several principles for effective adaptation policy generally, including finance. These include integrating, some of these relate to better planning, such as integrating adaptation into key policies and making sure that plans consider both 2-degree and 4-degree global temperature rises. Some of them relate more to maximising benefits over costs, such as avoiding lock-in, where decisions we make today can create higher costs in the future or create irreversible changes. It's also very important to address inequalities, both to consider the inequalities that will result from climate risks, but also to factor these in when we consider the adaptation actions that we're going to make in response, so that we don't exacerbate existing inequalities. All of these principles need to sit within a well-defined vision for what a well-adapted UK actually looks like. And then this vision needs to be underpinned by sufficient funding, resourcing, metrics, and research. Which brings me on to what the assessment stated around financing and funding of adaptation in the UK. So given the gap between the level of adaptation and the level of risk, sufficient funding, financing and resourcing are going to be a prerequisite for effective adaptation. There are several financial barriers to taking action, and these barriers vary across the different sectors that we consider. New initiatives and financial products are helping to address some of these barriers, but these are going to need to be scaled up if we're going to meet the extent of action required. Green finance offers the potential to finance adaptation actions with wide-ranging benefits across mitigation, adaptation, as well as biodiversity protection. And that government will have a primary role to play in helping to integrate adaptation and resilience into the financial system and existing economic plans. Since the climate change risk assessment, the Climate Change Committee has decided to do a new report on financing adaptation in the UK, which we hope to publish later this year, perhaps in November or December. We're still at a relatively early stage in drafting the report, and so what's on this slide is provisional, but we've conceptualized dividing the report into these 4 work packages to try and address the key questions and issues for the UK. So in the first work package, we'll look at the state of UK adaptation finance, including making it clear both to government and to the financial sector and to businesses what we're meaning about when we talk about adaptation finance. So setting out key definitions, terminology, frameworks, as well as challenges in understanding. and also trying to set out what we know and what we don't know about adaptation finance flows in the UK. So thinking about the current investments, so how is adaptation currently funded by government in different ways across the different sectors that we cover? What private sector initiatives currently exist? How have they incorporated adaptation to date? And how effective has this actually been in channeling adaptation finance? And then something more quantitative around trying to get a better sense of what current investment in adaptation is and how this might change in the future given increase in levels of risk. The second and third work packages are closely linked, one around barriers to adaptation finance, so trying to understand for the UK what is stopping adaptation finance flows at the moment and how these barriers are going to differ across sectors. And then also understanding how these barriers have been overcome in specific situations to date, both in the UK and internationally, and how these approaches might be scaled up or replicated more widely. For these second and third work packages, the Climate Change Committee has commissioned an external research project, which has done a literature review, has carried out several case studies, and is also going to be making a series of recommendations based on the findings from that literature review case studies. And we hope that research project will report around mid-June. And then the final work package is a deeper dive into financing adaptation in the natural environment, given the importance of the natural environment for climate risks in the UK, trying to address things like nature-based solutions, as well as how we can learn from existing mechanisms which have been developed, perhaps for mitigation or for biodiversity, and what are the underpinning mechanisms and governance structures that are needed in place to support achieving adaptation goals through improved finance in the natural environment. Lastly, as a starting point for thinking about these issues, the UK government has previously published its green finance strategy, which is going to be refreshing this year. And we propose to use a similar framework to the one it's used in its green finance strategy, but tailoring it towards adaptation. In particular, distinguishing between making finance climate resilient, where we're considering how well climate risks and adaptation have been incorporated into mainstream financial decision-making, not just in decisions by the financial sector, but the financial decisions of households, businesses and infrastructure providers. This is an area where the UK government is currently doing a lot, coming up with its own green taxonomy, like similar to the EU's, as well as a broader sustainable disclosure regime with new transition plan standards and plans for potentially bringing ESG ratings under regulation. And that aspect will be separate from what we refer to as financing adaptation. So thinking more broadly about how adaptation in the UK is currently funded and financed, and how can more finance be directed towards adaptation to manage risk, and what might some of the enabling mechanisms be needed to achieve this. And then we hope from this work that we'll be able to identify opportunities to the financial sectors and to businesses that arise from considering adaptation finance. The last thing I'll mention is just a point of interest, which I may wish to follow up on, which is the UK, the Bank of England today has published the results of its climate stress test, just as we've been talking. So I'll look forward to reading more about those, and they may be of interest to others as well. But that concludes what I hope to cover in this presentation today. So just to say thank you very much for listening.
Thank you, David. We are looking forward to the results as well, to see where the UK is standing in that respect. And thank you for discussing with us the findings of your reports. And we're also looking forward to the upcoming report at towards the end of the year. Now, at this stage, I would like to ask a question to all of you participants of the second session. If you were to prioritize one action, policy, or tool to support adaptation financing, what would that be? That goes to all of you, and each one can answer through their own respective role. I think, Olivier, if you want to go first. I know that we have
unfortunately,
I know that you have certain commitments in a few minutes. Thank you.
Thank you, Dora. I think largely that, and that holds both for adaptation, but for the green transition more broadly, that the alignment of national tools is crucial. And that holds for the investment instruments I mentioned. It also holds for environmentally harmful subsidies, because we also have a number of subsidies in place that are eventually giving the completely wrong incentives, particularly for adaptation. And I think, this approach need to be mainstreamed across, every single government support policy and state aid which is provided, because we know very well that a very large part of private investment in Greece is essentially crowded in through those state support systems, right? Through these state aids, if you want. So I would say this is the first priority. I take the point that we don't want to penalize people, right? And we need a conversation and, the progressive setting of standards of climate proofing approaches and so on with businesses in particular. I would favor such an approach. On the other hand, it is a pity to be using a lot of taxpayers' money essentially for, investments which face substantial risk potentially as a consequence of their exposure to physical risk of climate change that they may not be aware of. But I think it is the responsibility as well of public authorities to essentially guide that investment in that direction. And a very interesting thing was obviously, at the EU budget level, something which again doesn't exist in Greece was, the pilot application of the do no significant harm principle for the entire spectrum of RRS investments beyond those that are tagged as greens. And I think that's a very important first step. It wasn't applied, in a very consistent and, I would argue effective way, but it is a first step to try to essentially have a kind of horizontal measure and ensure that at the very least, all these support instruments, are not harming adaptation, mitigation objectives or other environmental outcomes. So I would definitely place that number one on the priority list.
Thank you, Olivier. David?
Thank you. So I think my number one priority would be improving tracking and more monitoring of investments into adaptation. I think until understanding how investments are positively impacting adaptation or negatively impacting it in investment portfolios, then it's very difficult to make progress. So that would be my number one priority.
Thank you. Svet?
Yes, in my view, the priority should be placed on understanding better the costs of not adapting. A lot of the barriers to the financing of this project has to do with uncertainty, and this uncertainty is also based on not knowing that well the opportunity cost of those projects. And this is also very important to be done at local level for each local project. So when you know better the adaptation cost, the cost of not adapting, then it's easier also to gain public support for these works, and also to get more insurance into the for protecting from these risks.
Thank you, Svet. I'm not sure if we have Michael with us. Michael, are you still with us? Okay, if not at this stage, I would like to invite participants from the previous sessions in case they would want to make one last remark before closing. Maya, Ioannis, Mr. Mwatso, in case you would like to make one final comment. If not, then I will move on to my concluding remarks. Okay, great. So it's been a pleasure to have all of you here today. Starting from our governor, we discussed and we learned a few things more about the important role of central banks in climate change. We had also the pleasure of having all the co-organizers of this event with us, hear about the important initiatives of the Ministry of Environment and Energy and the importance of green fund programs. We saw the new climate projections. We discussed the key role of the financial sector and the significance of synergies. the importance of bridging the insurance gap and the role of insurance in climate financing. We saw the quantifiable positive outcomes from adaptation financing. We saw that we need to prioritize certain sectors there, for example, water sector and water scarcity in Greece, the importance of nature-based solutions. We discussed market failures, adaptation gap, and various types of financing and innovative structures, the cost effectiveness of adaptation, the maladaptation, how do EU and Greek regulations align best practices as well from the UK. And I would like at this stage to thank all our speakers, first and foremost our governor for being with us today and supporting all the bank's initiatives on climate and sustainability. The Secretary General of the Ministry of Environment and Energy, Petros Varelidis, Director of Green Fund, George Protopapas, our Minister for Climate Change and Civil Protection, Christos Stylianidis, who honored us with a message for this event. Of course, our Professor Christos Zerefos, our climate envoy for Greece, Professor Haroula Palagaki, who joined us despite a difficult schedule, Henry Moachos from the Hellenic Association of Insurance Companies, Maya Henriquez from EBRD, Ioannis Kaltsas from EIB, Zved Danchev from IOVE, Olivier Vardakoulias from CAN Network, Michael Mulan from the OECD, and last but not least, David Style from the UK Climate Change Committee. We do hope that we will have you with us on one of our next workshops as well. And of course, I would like to thank our audience for their interest and participation. We reached the number of 200 participants today, which is very promising and encouraging for stepping up our efforts, our collective effort to take action on financing adaptation. And finally, I would like to thank the organizing teams and all our colleagues that worked hard to design and realize this event, the teams at the Ministry of Environment and Energy, the Green Fund, and of course, the Bank of Greece. Thank you.